Hi, this is Tony Sagami. You know, with that big BP oil platform burning in the Gulf of Mexico, I thought maybe this would be a good time to talk a little about oil and the impact it has over in Asia. I'm going to start with OPEC. You know, people think a lot about OPEC because they do control 40% of the world's oil production. But OPEC came out a few days ago with a forecast upping their increase for global demand for oil by 950,000 barrels a day. That's almost 1 more billion barrels a day they expect to sell in 2010. And now their forecast is for the world to use 85.3 million barrels of oil a day. They even had a statement. They said the recovery in the world economy appears to be continuing at a steady pace. China has been among the main drivers behind that oil demand growth so far this year, which should continue for the rest of the year. So OPEC is expecting continued growth out of China. And even the Chinese are themselves. For example, in the month of April, China used 4% more oil in April than they did in March. And they imported a record 5.15 million barrels of oil per day. 5 million barrels a day. That's a record for China. They also set a second record in April in that they processed and produced 3.9 million barrels of oil a day out of their own oil fields. So they're importing record amounts and producing record amounts. And so it gives you a little idea of how strong the Chinese economy is. Now, OPEC's not the only one that is impressed with the world's oil consumption. The International Energy Agency have increased their global consumption by 1.7 million barrels a day to 86.6 million barrels a day for 2010. And so you're talking about a growing demand for oil, and with oil bumping around $80 a barrel now, I suspect it's going to go much higher. I don't know how fast we'll get back to those $150 barrel a day prices, but I definitely think the move for oil prices is upward. If you wanted to participate in that oil growth, I think some of the Chinese plays are the very best ones. The ones I take a look at are CNOC. That ticker is CEO. CEO. That's China's largest natural gas producer. Also take a look at Sinopec. The ticker is SNP. SNP. And that is the largest oil refiner in China. And a little closer home, you can take a look at Husky Energy. Husky Energy is a Canadian company. Its stock's listed on the Toronto Stock Exchange. The ticker is HSE.TO. HSE.TO. And the reason that Husky has a China influence is that it's owned by one of the richest men in China, called the Warren Buffett of China. This man not only owns Husky Energy, he also owns dozens of rich companies, and he even has a 99-year lease on the Panama Canal. And Husky Energy has a significant ownership interest in several of China's largest natural gas and oil fields. And finally, if you really wanted to get enthusiastic about the Chinese oil play and get a little more bang for your buck, take a look at China Oil Field Services. That's traded on the Hong Kong Stock Exchange. That ticker is 2883.HK, 2883.HK. But it's also listed here in the U.S. on the pink sheets, and that ticker is CHOLF.PK, CHOLF.PK. So there's four very Chinese-influenced oil stocks that have a very bright future in front of it. Should you rush out and buy them right now today? No, but that's the shopping list I would take a look at when you want to add some oil stocks to your portfolio. Until next week, this is Tony Sagami signing off.